All right, Kevin, this is for Monday, March 18th. I'm going to go through all the markets. Some of them I haven't looked at yet thoroughly, though, like the euro currency and the currencies and so forth. But then I'm sure I could do them on the spot. I'm actually going to, why is this not working? Come on now. All right. I need to go to the bottom here and come on. There we are. Okay. Wheat. You just saw the 10-year forecast, by the way. But let's talk Monday's wheat. Um, you know, 474 and a quarter is actually in reach today. If we push through 64 and a quarter, and in fact, the next couple, 2, 3 days above 454 and 3/4, that 474 and a quarter trend line can contain weekly buying pressures. I think we're talking about liquidating one of those calls there. If we close above it, it should be a fairly hard fought battle. I don't know. I mean, I've got 485 even, and the mid 490s all the way up there. These little, but they just might be session containment levels. It may look very much like the last 3 to 5 days do, where we actually get up to 509 half, which is the target now, 1 to 2 month target. I'm calling it. Above 430 and 3/4. So if we close above 74 and a quarter, we actually, could quite reasonably get to 509 half to 515 half within 1 to 2 weeks. And that upper target is able to contain buying into May expiration. And it's also, I'm going to scroll down to the weekly chart here. This is a pure weekly chart, so July will inherit these price levels in due time, and it then represents a ceiling for July, this channel top. This is an area that can contain buying. I'm thinking possibly through spring, possibly, and then once we test it, the market then vulnerable to slipping back into the low 430s once again within a month or two. This is also the area we need to settle above on a weekly basis to actually indicate upward continuation to the channel top that's not labeled in the low $6 area. So that's what we have. 474 and a quarter, close above. Expect the targeted low $5 area within a week, 2 or 3. Now downside today, if we break or open below 54 and 3/4, 46 and a quarter is expected, and that level can contain session weakness. Excuse me, but if we close below it, excuse me again. Expect a retest of that 430 and 3/4 channel bottom, page 2, significant floor of support into spring. And I think I've said about enough because a lot of this is just repeat. Let's go to corn here, long one call. Um, I've got 366 half. We are now above 370 half. By the way, if you can imagine, that's what is 370 half? It's nothing more. It's a channel top. This bottom, that bottom, that I could actually show you, but yeah, why don't I show you? Go to corn, May, boom. See if I can find it here. I'm just going to draw it on this particular chart. Low against high. There it is. 370 half. And so now what we have are this extreme channel top, 376 half, that's in reach today. But overall, this failed signal, this failed signal above 366 half does allow this speed line, which is now at 386 and a half. And I do show that. 386 half. So that's what we're looking for, 386 half. If we get up there this week, that would be quite a rally. But it is an area where we would, I think, need to liquidate that call and possibly consider buying puts at that point in time because the market could then easily slip back into the 360s once again following a test of 386 half. And I think that's all I'm going to say for wheat and corn. Let's go on to we've got the cattle market. We're talking June now. We did, this is June. We're still looking for this 123.42. Why do I show it? Yeah, 123.42, that channel top. We just might test it this week. And this is our, do we sell it short here? I think we could sell it short and then keep a tight stop and reverse because, if we get up and over this thing, we're looking for the low 130s anyway over the following month or two. There's not much here on this chart to stop it then. You've got some trend lines and such off of this low. You've got trend line. I don't know if I even have this on there yet, 127 and change, where we could top out for a week or two perhaps, but ultimately looking for this if we settle above 134.20. I'd like to hear what you've got to say about this in tomorrow's call. Whether you're interested in playing the short side at 123.42, because that could be in the middle of the day. That could actually happen Monday. You and I get off the phone, and then 2 hours later we're testing it. And I'm skiing. No, I'm just kidding. But I might be skiing. And then, we would just, yeah, I'll sell a call there. And then if we close above it, a limit up move on Monday for June would be, 124.92. So, and then presumably we'd be long by that moment. Anyway, so we'll talk about that in Monday's call. Feeder cattle, I don't, we're getting close to testing long-term resistance in feeder cattle. Um, there's that long-term speed line at 149 even this week. We may actually test that on Monday or Tuesday. This is an area, I don't know how comfortable you are. I know it's a relatively thin market. Do we buy calls with a weekly settlement above 149 even? I'm not opposed to it, actually. I think after all of this consolidation, this somewhat rounding bottom, we settle above this. There's also 149.67 on the daily chart. Let me go to feeder cattle here. Oh, come on now. Just open the goddamn thing. Here we are. All right. All right. There it is. 149.67. So a settlement above this, even today, I think is worth going long. How do we do it? There's another topic for conversation. We've got sort of buy signals waiting for us with settlements above key points in both June live cattle and April feeders, and I don't think the May feeders are going to be altogether different, although we're closing in on them in terms of rollover, so we can talk about that too. So that could be a topic for conversation. These are definitely twos, both June live cattle and April feeders. Let me continue scrolling down. I don't see anything else here. Lean hogs, I get the sense this is a runaway bull market. Let's take a look at this chart, 87.25. Do we step in front of that? We could easily watch this top out today at 87.25 and then close down on the day, which is a bit of a confirmation. Do we then go short or do we just stay out of this thing? This is a market that can just keep running, and I would hate to sell 87.25 and try to stop out with a limit up move. I mean, we've got limit up scenarios here. If we're not long already, do we stand in front of this thing? I don't know. I think here, 92.12, and I'll just show that to you on the lean hog letter itself. I know you've seen this by now probably, but page 2 is this long-term ascending channel top in the weekly chart. That could be an area we stick our neck out, but we can have a dialogue about that, obviously. Let's go on to well, we're going to stay out of ethanol. I think we've decided I'm not even going to bother with it anymore. RBOB, once again, I've backed off. I've risen the resistance. How should I say? The resistance has risen. 1.8736 is the start of a range of resistance up to weekly chart here, 1.9261. We had this channel structure here that I was showing you before that we actually settled above. But we didn't settle above that daily channel top I just showed you at 87 and change. And so I'm going to call this a range of resistance all the way up to 92.61. And this is a big area. It coincides to this 1.9077 low. So this is an area. Do we wait for the buy signal above at the end of the week? Or we just watch this thing? I'm not opposed to either one. I'm not pushing this trade. I'm just saying we're in the midst of a zone right now. This is actually still considered kind of a 1 in terms of actionable if it's something that we're interested in pursuing. Right now, I think I'd rather just show you the crude oil chart itself, rather the newsletter. 54.78. I don't think we're going to see that this week. 57.21 is this thing here. I got it at 57.43 for the May contract, but I've lowered it because the daily chart, same formation, is at 50, well, it's 57.20. I missed one of these. Anyway, 57.21 I have today. That's our support, and above which, still expecting, come on, crude, this probably within the week, 61.45 to 94. This is our resistance area where I think when we're testing that this week, assuming we are, we could look at puts, at the money puts, $60 puts, $62 puts. Um, I don't think the market would sell off ferociously from this point. I think it's going to be more of a, because, the overall emphasis for the last couple of months has been a kind of a slow creeper up. And I think there'll still be people, buying into this who are unaware of this resistance area. But the bottom line here, continued weekly settlements, once we test it at or below this $0.50 range, certainly allows big picture into June, July, a collapse back into the $46, $47 area, which is also illustrated here. On the other hand, if we close the week above 61.94, then I got a high settlement price on this weekly chart way up here around 74.34. And you got a kind of a high in that area too, in the low $75 area. That would be the next, I'm calling it a 3 to 5 month target, may actually accelerate within 2 to 3 months. So there's that. That's crude. Let's see here. Corn just covered. Soy meal, soybeans. Soybeans, here we go again with the chart crap. Bear with me here. There's the speed line we settled above on Friday. It is now at 906 half. And I'm calling this as a 2 to 3 week target. But if you're still reluctant to get long the beans, bear with me here for just a second. Did I do that wrong? I can see this line move. No, it's bright. You could wait until a settlement today above 913 and 3/4. If we now, the thing is, I've called this an intraday containment level because I'm actually leaning on the 906 half support as trend defining, and that it's inevitable we will violate this channel top. But if we close above 913 and 3/4 today, that is yet just a secondary sign that 941 and 1/4 is in reach. So we could talk about getting long either today above 906 half or a settlement today above 913 and 3/4, because we still have, about a 25 cent run at that point, maybe a little less than that. Yeah, 25 cent run up to 941 and 1/4, which is a big area. So we could talk about beans. Beans are kind of a one right now, but we're already long the grains, and I don't know, if we need to keep getting long the grains. But a buy signal is a buy signal is a buy signal. All right, S&P. I think once again I'm going to show you the babbling here, the newsletter itself. 28.34 even, big area this week. This channel structure, 28.34 even. If we settle above it on the week itself, the market should continue higher over the next 2 to 3 to 5 months to this 30.81 and 3/4 area, where we can actually top out into later, if not through 2019. So this is a big area. We're at it right now. I'm going to call the S&P a 1. Does that mean, by the way, the 1 just means, it doesn't mean we should be. It just means we're testing. We're testing an area right now. And if there's an actionable signal to be made in that particular market, it is in this very moment. Does that mean that you and I should do it? Obviously, I think we both agree, no, not necessarily. If we back off this 28.34 formation, 27.36 and 1/4 is in reach, possibly this week, although we need to settle below 28.07 even to indicate that. 27.36 and 1/4 able to contain selling through next week. It's also a downside continuation point into April trade. As I said, holding a settlement above 28.34 even on the week itself does indicate 29.47 even within several weeks, and that 30.81 in 3/4 formation within several months, 3 to 5 at the most. Depends on how the market treats this 29.47. I could see a double top for a while, for a few weeks. Then we get back to this 28.34 even formation where it bottoms out again, say through May and into June, and then it resumes an upward. I could see that scenario playing out. So that's the S&P. I'm covering the S&P, I might as well jump right to the NASDAQ because it's a similar structure here. This week at 75.49 half is the same formation really. And let's just take a look at this particular chart. Yeah. Let me see. Yeah, that looks very similar to the S&P. And so, here we have this spike low, move high this week at 75.49 half that if settled above, and it is possible, that we should then, and that's not much of a rally actually, that could be 2 to 3 weeks, geez. This is a weekly chart, so this is a big area as well, 80.75 half. We can keep an eye on this. This is a resistance area. Once we get up in here, you're getting into this old congestive zone. So there's a case to be made for this being an area able to contain buying through April, and then once tested, the market can slip back possibly to the high of this low, and this low is in the low 64 handle. So there's that. Let's move on to these other markets that I don't do newsletters for, and we'll start with the euro currency, see what's going on there, if anything. Continued higher, 15 half. Let me just draw something here while we're looking at this to see what would be a nice buy signal. And that's at 15.95. I think you got the little levels all the way up, but after settling back below this formation, do we buy it above 15.05? I'm a little uncomfortable with that because we have precedent for getting above it and then falling back below. I'm very comfortable with buying this. In fact, I'm going to relabel this 15.94 for the week itself, and I'm going to call that 99. So there's that formation this week at 15.94, and if we settle above it, I think that's a nice buy signal for the euro currency. Until then, I'm going to call this our new ceiling, say through the second quarter. Once tested the market, then vulnerable to slipping back to this 5/8 Fibonacci retracement level, which actually, as you can see, is held nicely. And this is the formation, not a formation, this is the pullback point that if settled below on a weekly basis should continue continued collapse. Collapse is a strong word for this market. Continued declines into mid-year or wherever we can, however long it takes us to get down to the very low one currency dollar unit. So there's that. This is a 2, maybe a 3. It's worth watching though. Canadian dollar. What happened here? Wide day. We're still screwing around with this channel bottom, though we did close a little higher on the day. Did we? 75.06, 75.09. Yes. This is a daily chart, so I still like this area up here. This is a pretty good pivot point. This is an area I think when we get up in here, I think I think our risk management needs to be pretty tight. I don't think we fall asleep at the wheel. I think we could buy puts here at the money puts, and then presumably the market could then rotate south again, maybe to new lows, the new channel bottom once we test this area up here, which is in the upper 73s right now. And at the same time, if we close above this formation, I'd say we reverse and actually go long because I think we got a 1 to 2 to 3 month rally into the 77 handle after penetrating this. Okay, so Canadian dollar, a strong 2. Japanese yen, hasn't been much going on here, still not. God damn it. All right, British pound, rally. So once again, we've got a new 28.57 for the week ahead. That's our base of support, and above which, as I've been saying, we're neutral to bullish. And right now we have a new high settlement on the weekly chart following the December low. So this area is certainly not out of the question over the next month or two, which is the 138 half area. So just know that. Nothing to do in the British pound except buy it at 28.57 on a dip. Otherwise, we sort of missed the move, if you will. I'm not regretting that, up into the 38 area. And not until we settle the week below 28.57 is this a short play, in my opinion. On to gold. Talking June gold, we came close. You know, this 98.6 is our Monday support. We still have the speed line. The speed line now is at 1316. The high settlement was basically 1316, 1315.8. So if we close above the speed line, I like this buy signal. You know, we're looking for the top of this channel, which is not even constructed right now. It would be something like, you know, this. Up in the 1370s climbing. So this is our support, 1298.6. If you want to look at calls, $13 calls, whatever the case might be, or 1315s, 1320s with a settlement above this speed line. If we close below this channel bottom, as I've been saying, we're looking for this speed line in the 1250s within 3 to 5 weeks or sooner. 20 minutes, this video. Silver. This channel bottom, come on channel bottom, 14.963 for the week itself. So that's our support. It looks very similar to the British pound. I don't know why, but it does. Maybe there's some symmetry there on some fundamental basis. 15.684, I believe that was. That's our resistance for the week. 685. And so, you know, holding above this base here, which coincides with these highs in the top of this old consolidation area, this is a good support area. I have no problem buying calls down here. I keep saying options now. I don't know why, but buying at the money calls here with once tested, the market able to continue higher into the upper 16s over the next several months or sooner. If we close the week below 14.963, that on the other hand would indicate a retest of these lows from 13.8. And as I was saying, there's a channel structure here that I think would be the real target if we close below this. New lows down into the low 13s. So 14.963, significant pivot point for lead contract silver. We got one or two more to go. Copper. Oh wait, I didn't cover that. No, this video may go 25 minutes. The week itself, 2.8593. Copper still looks good longer term, which is to say into summer above this formation, the next 3 to 5 months or sooner, maybe 2 months up into this area, which is at, you know, 2971. 2971 for the week itself. Sorry I'm putting you through this, as I haven't updated these charts yet. But this is just, we're just going through these repeats. Nothing to do in platinum still. 30-year bond. The week itself, this is a weekly chart, 149.10 is our overhead resistance that can contain quarterly buying pressures. These are respectable areas nearer term. We get above this line here at 147.16. This is a week away, 149.10. Big test, below which the market can rotate south, above which we continue on. And while I'm talking about this, let's jump right into the 10-year because it's a very similar structure. You've got an old high at 123.08, settled 122.31, and you've got this channel structure at 13.5. 123, 13.5 is the big picture 10-year resistance that, like the 30-year, can absorb buying through the second quarter. Once tested, the market prone to bearish rotation, there'd be a pretty significant support here to violate on the way down. If you can imagine a channel structure off of these two highs against that low, that would be our downward pivot point. And then, you know, if we settle above 123, 13.5, then 126.12 becomes the next objective, and that could be 2 to 3 months. And you've got a channel top rising that will converge with this in April. So there you have it. Big pivot point at 123, 13.5 for the 10-year. I'm not at all opposed to playing this. If you want to see how it treats resistance and then maybe backs off and we buy calls or puts rather at a more expensive price following that test, we could, or we could just stick our neck out when they're testing this and buy puts. Maybe graduate in buying one and then another later for a higher price if we get some confirmation. And then if we settle the week above it, or even the day. This will come in on a daily chart as well. So we can talk about that. If we get up into this area, I can cast these lines on a daily chart, which might drop a half a tick a week or so, or even less. Half a tick a week, I think, is the way it looks. Anything else? Covered the NASDAQ? No, that's about it. 25 minutes. All right. Sorry about all that. I'm going to call it a shoot, and we will talk tomorrow morning. Have a good Sunday.